It's been a wild ride from a bedroom startup to a technology giant with 900 million friends. Social media company Facebook is set for one of the most anticipated public floats in US history. But some analysts fear the company is overvalued and relies too heavily on advertising for growth. Emily Stewart has our story.
It's just you, me and 900 million of our closest friends using Facebook.
Everyone wants a piece of it and they're all hoping that the growth can continue.
Facebook's initial public offering will be between $34 and $38 per share, valuing the company at more than $100 billion.
If you look at, say, 900 million users, let's just say pie in the sky, it grows to $1 billion and stops. $100 billion is saying that these users are worth $100 a piece over their lifetimes. So you're going to monetize $100 worth of ads over their lifetimes. That's pretty low.
But many analysts are concerned it's overpriced.
To justify this kind of valuation, you have to believe that the company can grow its revenues and profits at over 50% a year for something like for 6 years. And I think that's just simply an unrealistic expectation given it's operating in a pretty competitive marketplace.
It certainly doesn't appear to be driven by any economic analysis of the business of this company. We often see this sort of behaviour around well-known brands, household names.
The company's revenue was $3.7 billion last year, but more than 85% of it stemmed from advertising, which can be a shaky revenue stream. Just overnight, General Motors pulled its $10 million advertising spend. The explosion in the use of smartphones and tablets mean more than half of all Facebook users access the site via a mobile device, where it's difficult to advertise. It's a challenge the company will have to overcome if it's to grow its revenue base. And its gamers are driving 15% of funds, and some say its future.
That's sort of the viral idea of Facebook, is that you can play a game, share it with your friends, share your scores. I would be surprised if that wasn't a large part of where they end up going.
But other technology companies have succeeded in diversifying. Google floated in 2004 and its value has increased eightfold.
It started from a very small base, growing into an area of business that was not occupied by anyone else. In contrast, Facebook launches in a world where you have already very significant competitors, including Google, who are chasing those advertising dollars.
Analysts warn if privacy concerns grow, users could leave the site, taking significant revenue with them.
Users are very concerned about what their information is being used for, but that's the obvious place for Facebook to go to is to sell data, or at least to target ads very well, which might get off the side of users.
We saw what happened with MySpace when it was taken over by News Corporation. The mainly young users there deserted in droves, and it appeared to be an antipathy towards large corporations.
Australians who are keen to invest can do so through specialist brokers.